European markets. We had really started to pull back into the tail end of July, coming into August, but the gains we saw last week correcting that slump and just showing some fresh momentum in European markets. Do you buy into it? Do you think we've got further room to run here?
Hi, good morning, Karen. Yes, I think we do. Our scorecards across the major plus more recently emerging market equities, which we'll talk about, have been quite constructive. We have seen upgrades from a fundamentals point of view across UK, across US. We've also seen upgrades on the market price behavior across US, UK, Japan, and China. And we've also been moving a little bit more positive in some of the emerging market regions. So we do believe there's more to run. The underlying fundamentals are in our view, quite strong. The positioning is not overextended. And if anything, we believe that there's more right tail risk surprises than left tail risk.
I've got to say, it's been a bumpy ride for some of the big healthcare stocks this year. Today, they are the leaders on the boards versus defence names that have been absolutely leaping from one high to the next. They've come off with concerns about what happens if there is any breakthrough between Russia, Ukraine, and the war we've been witnessing there for a number of years now. What's your bet on the different sector plays here in areas that have been hot areas for a lot of investors to date?
Totally. Two points. First, specifically within the healthcare, we turned positive healthcare on the first day of August. And the reason for that was healthcare stood out as the most attractive sector across the 11 GICS sectors. It scored first on our economic outlook for the next 2 to 4 quarters. It scored top again on our inflation outlook. It scored very high in terms of the attractiveness of valuation, but very poorly on momentum and market price behavior. So we felt that this is a good opportunity, given the correction that we had seen until then, to turn positive healthcare. So 3 out of our 4 key components were very high, very close to the top. So that's the view in terms of healthcare. More specifically, in terms of the developments within the Russia-Ukraine, again, recently, that was probably around the middle of June. In fact, it was during the 12-day war, which we felt is going to be inconsequential. And we used that opportunity to turn positive a number of emerging market areas. But specifically, we turned positive the Eastern European area, because we felt that apart from the idiosyncratic components within its own countries, we felt, number one, the mega movement, the Made Europe Great Again movement, was going to be constructive, but also the eventual reconstruction of Ukraine following a compromise. So we expected that the right tail risk event there could be closer, and we turned into Eastern Europe to benefit from that rather than specific sectors.